Easy come, easy go. This phrase fits crypto a lot. Soon after the price of Bitcoin rose to $59,423, the price of all cryptocurrencies began a drastic decline, dropping 36% over the next couple of days. By Forbes' estimate, billionaires who have built their fortunes around cryptocurrencies lost $15.5 billion. This effect has made some of the moguls poor. Watch on as we discuss 10 crypto millionaires or even billionaires that have gone broke. Before that, please hit the like button and subscribe. Number 10. Changpeng Zhao. Zhao is the CEO of Binance, the world's largest crypto exchange. CZ, as he is popularly known, owns an estimated 70% stake in Binance. He was the one who lost the most money in the crypto crisis, with a net worth dropping to $4.5 billion from a staggering $65 billion. Despite his losses, Zhao still tops the list of the richest in the crypto world. CZ was the one that helped set FTX's demise in motion on November 6th when he tweeted that Binance would sell its remaining FTT, the native cryptocurrency of FTX. That triggered a run on FTX's coffers as customers scrambled to withdraw their money, only to discover it was gone. FTX declared bankruptcy a few days later. Zhao prevailed over his rival, but now he must contend with the consequences. That could include the clawback in bankruptcy court of the over $2.1 billion that Binance made from selling its stake in FTX back in the summer of 2021. Zhao also faced increased skepticism of centralized exchanges, particularly Binance, and ongoing investigations of him and his company by authorities in Europe and the United States over allegations of facilitating money laundering and other financial crimes. Number 9. Barry Silbert. Silbert is the CEO of troubled crypto empire Digital Currency Group, which, according to Cameron Winklevoss, CEO of crypto exchange Gemini, defrauded about 340,000 crypto investors using Gemini Earn. The allegations come nearly 2 months after Genesis Global Trading, DCG's wholly owned lending firm, suspended withdrawals for customers in the wake of FTX's collapse. Gemini had partnered with Genesis for its Gemini Earn product, which offered investors annual interest returns of up to 8%. Winklevoss alleged that Silbert and his companies defrauded Gemini customers by conspiring to make false statements and misrepresentations about the solvency and financial health of Genesis. He added that by lying, they hoped to buy time to dig themselves out of the hole they created. Genesis Global Capital owes creditors at least $1.8 billion, while getting saddled with a $1.1 billion liability from Genesis. This debt stemmed from a bad loan. Apart from this, the company still owes Genesis another $575 million. DCG also owes $350 million to investment firm Elridge if Genesis goes under. To stay afloat, Silbert will likely have to raise outside capital or dismantle his DCG crypto empire, which includes some 200 investments in crypto firms and tokens, including crypto news site CoinDesk, Bitcoin mining firm Foundry, and Grayscale Investments. Forbes estimates that the value of DCG's outstanding liabilities is greater than the fair market value of its assets in the current market environment. DCG may also struggle to offload illiquid bets. So for these reasons, it is estimated that the current value of Silbert's 40% stake in DCG is approximately $0. So Silbert's net worth has decreased from a massive sum of $3.2 billion to $0. Number 8. Alex Atala. Alex Atala is the Chief Technology Officer of OpenSea, a marketplace for non-fungible tokens, digital assets that represent real-world objects like art. He co-founded New York-based OpenSea in 2018 with CEO Devin Finzer, and together they became the first NFT billionaires in January 2021. However, this same source of his vast wealth became the source of his fall. During the crypto crisis, his worth fell from $2.2 billion to $600 million. Atala later shared news of his impending exit from the company. He noted that while he is leaving the company, he will not remain on the board. He said the reason for his quitting is to return to his core passion, which is building something from zero to hero. Number 7. Tim Draper. The bear market didn't appear to have initially dented Tim Draper's enthusiasm for cryptocurrency. Speaking on stage at Web Summit 2022, the former billionaire argued that his prediction that Bitcoin will hit $250,000 still holds. Sporting one of his Bitcoin ties, Draper argued that by mid-2023, he is expecting to see Bitcoin hit that amount. Tim Draper, who holds around 30,000 Bitcoins, dropped from the billionaire ranks earlier last year, when Bitcoin hit $33,000. As ever though, Draper remains optimistic about Bitcoin's future, even though his oft-repeated $250,000 price target looks more fanciful by the day. Draper told Forbes in an interview that he suspects that this is the beginning of the end of centralized tokens. If a token is centralized, you're at the mercy of the person who controls the currency. And that was the case with FTX. He added, Draper also lost his worth from $1.2 billion to $550 million. Number 6. Gary Wang. The United States Securities and Exchange Commission and the Commodities Futures Trading Commission hit former FTX co-founder Gary Wang with fraud charges. Wang was charged for his role in the multi-year scheme to defraud equity investors in FTX, with the SEC also investigating whether other security laws were violated as well. When all these were reviewed, Wang was charged with fraud in connection with the sale of digital asset commodities in interstate commerce. Number 5. Brian Armstrong. Coinbase founder Brian Armstrong had a personal fortune of $13.7 billion as recently as November and about $8 billion at the end of March. This worth has now been reduced to just $2.2 billion after a sell-off in digital currencies from Bitcoin to Ether triggered a precipitous decline in the market value of Coinbase, the largest U.S. cryptocurrency exchange. The firm's shares have tumbled 84% since their first day of trading in April 2021, closing Wednesday at $53.72 after the company warned that trading volume and monthly transacting users were expected to be lower in the second quarter than in the first. It raised questions about Coinbase's ability to withstand the sharp decline in crypto prices, forcing Armstrong to take to Twitter to defend the company, saying there's no risk of bankruptcy even amid a black swan event and users' funds are safe. Number 4. Michael Novogratz. The CEO of crypto merchant bank Galaxy Digital has seen his fortune plummet to $2.5 billion from $8.5 billion in early November 2021. He's been a champion of Terra USD, the algorithmic stablecoin that's now at risk of a complete collapse amid a breakdown in the price of a crypto token in the same ecosystem, Luna. Galaxy Digital Holdings has disclosed a $76.8 million exposure to collapsed exchange FTX and expects the turmoil in the industry to continue in the weeks ahead. Galaxy, which uses FTX to hold assets, said $47.5 million worth of assets are currently in the withdrawal process, the company disclosed in its third quarter results. Galaxy's net comprehensive loss was $68.1 million compared with $517.9 million gain in the same period 2 years ago, primarily because of unrealized losses on investments driven by reduced valuations under external market conditions. Number 3. Chris Larsen. Larsen is Ripple's co-founder and chairman, who has lost over $2 billion in 2022 due to XRP's declining price and Forbes' estimated discount on Ripple's equity valuation. Ripple, who last raised capital in 2019 at a $10 billion valuation, bought back shares from an investor last year at an inflated $15 billion valuation after that investor sued Ripple in connection with a Securities and Exchange Commission lawsuit filed against Ripple in December 2020. In this case, coupled with the crypto fall in 2022, Larsen's worth is now $2.1 billion, down from $4.3 billion. Number 2. Fred Ursum. Coinbase's co-founder Fred Ursum got burned by FTX's founder Bankman-Fried. His crypto venture firm Paradigm invested $278 million in FTX equity. Matt Huang, Ursum's partner at Paradigm, said on Twitter that they feel deep regret for having invested in a founder and company who didn't align with crypto's values and have damaged the ecosystem enormously. Ursum currently has $800 million to his former $2.1 billion worth. His partner, Armstrong, owns 16% of Coinbase and controls 59.5% of its voting shares, while Ursum has 4.5% stake and controls 26% of its voting stock. Number 1. Sam Bankman-Fried. In January 2022, Sam Bankman-Fried was riding high, with his Bahamas-based FTX just raising $400 million from prominent venture capitalists at a $32 billion valuation. He had everything to be happy about. A few weeks after that, SBF, as he is known in the crypto world, was listed as the second wealthiest person in crypto on Forbes with $24 billion in net worth. Now, Bankman-Fried is broke and awaiting trial. Before he was arrested in the Bahamas, Bankman-Fried told several media outlets his bank account was down to $100,000 and that he was not sure how he'd pay his lawyers. FTX's demise was a fitting end to a year of wealth destruction in the cryptocurrency and blockchain sectors. The post-pandemic economic shock, which triggered inflation and rising interest rates, sucked capital out of the speculative crypto ecosystem. Now, Bankman-Fried's $24 billion is reduced to zero. The embattled cryptocurrency industry and its wealthy pioneers face a moment of reckoning after the collapse of the crypto exchange FTX and the decrease in value of others as well. We would like to hear your opinion on this billionaire's massive net worth reduction. Kindly subscribe to our channel and click on the notification bell to see more of our videos.